Well now, I see all these headlines about artificial intelligence stocks, Nvidia, Tesla, and whatnot. And folks keep asking Warren, would you buy these companies today? You know, back in 1999 during the dot-com boom, people asked me the same thing about internet stocks. And I told them then what I'll tell you now. Asterisk, just because you can make money on something doesn't mean you should. Let me draw you a picture of how I think about this AI excitement. Now take Nvidia points with marker. They make the best AI chips today, no question. But back in the 2000s, Intel was the undisputed king of chips. Where are they now? Shrugs technology changes fast, and moats don't last like they used to. Charlie always says, God rest his soul, the three most dangerous words in investing are, this time it's different. Well, let me tell you about a little company called IBM. My grandkids gave me this. Cute, isn't it? Now Elon Musk. That fella could sell refrigerators to Eskimos. But here's what keeps me up at night about Tesla. They've got 20% profit margins today. But so did General Motors in 1965. Every car company in the world is coming for them. That valuation assumes perfect execution for a decade. And between you and me, I don't like businesses where the CEO Twitter account moves the stock 10%. Now, this is a business, I understand. Mary buys a pound of chocolates every Valentine's Day, whether the Fed raises rates or not. Let me show you what we are buying these days. These aren't sexy, but boy, do they throw off cash, railroad tank cars, electrical utilities, even a company that makes not exactly Tony Stark technology. But you know what? These businesses will still be here when half these AI startups are footnotes in history books. Back in 2008, Goldman Sachs paid us 10% interest for a lifeline. Today, these AI companies trade at 50 times earning. Now, which side of that trade would you rather be on? Got a letter last week from a school teacher in Des Moines asking, Mr. Buffett, how do I invest in AI without getting burned? Here's what I told her. If you must invest in tech, buy the whole low-cost index funds. Never bet more than 5% of your portfolio on any story stock. And for heaven's sake, Waves Coke can keep some powder dry for when Mr. Market has his next tantrum, you know. My first investment was a pinball machine I bought for $1.25 when I was 14. Put it in a barbershop and got $1 a week in profits. Turns to camera, that simple lesson. Buy assets that generate cash has made me billions, while much smarter people lost fortune. Chasing the next big thing. So when you see those Nvidia headlines tomorrow morning, ask yourself, would I rather be the guy selling shovels in a gold rush, or the miner praying he strikes it rich? Personally, I'll take the shovels every time. Investing is simple, but not easy. Well, folks, I've been getting a lot of questions lately about these so-called AI stocks, companies like Nvidia and Tesla. Now, you know I don't usually chase the latest trends, but since so many of you are curious, let's talk about it. Would I buy Nvidia or Tesla today? Let me give you my honest thoughts, just like I would to my good friend Charlie. First, let's remember, the stock market loves a good story. AI is the shiny new thing, and companies like Nvidia are riding that wave. Now, Nvidia makes fantastic products, chips that power AI, and their growth has been remarkable. But here's the question I always ask. What will this business look like in 10 or 20 years? Because if I can't answer that with confidence, I'm not interested. I've always preferred businesses with durable competitive advantages, what Charlie calls moats. Nvidia has a strong position now, but technology changes fast. Will they still dominate a decade from now? I'm not sure. Now, Tesla Elon Musk is one heck of a salesman, and he's built something incredible. Electric cars, batteries, even robots. But here's the thing. A great company doesn't always mean a great investment. Tesla's stock trades at a price that assumes everything will go perfectly for years, and in my experience, things rarely go perfectly. I like businesses I can understand with steady cash flows, like See's Candies or Coca-Cola, Tesla. It's exciting, but it's not my kind of bet. You know, Ben Graham taught me about Mr. Market, this emotional fellow who offers you stocks at wild prices every day. Right now, Mr. Market is giddy about AI, pushing some stocks to levels that may not make sense. I'd rather wait for a fat pitch. Business, I understand, at a price that gives me a margin of safety. Nvidia and Tesla might keep rising, but that doesn't mean they're intelligent investments. Now, if you're asking where I'd put my money today, I'd still look for the simple, predictable businesses. Companies that print cash, have loyal customers, and can grow over time. Think Apple. We bought it because it's a consumer staple now, not just a tech stock. Or old-fashioned banks and insurers, where the math works in my favor. I don't need to swing at every pitch, just the ones right in my sweet spot. So would I buy Nvidia or Tesla today? Probably not. That doesn't mean they're bad companies, they're just not for me. I've made my fortune by being patient, sticking to what I know and never overpaying. And my advice, you don't let the fear of missing out push you into decisions you don't understand. Remember, investing isn't about making the most exciting choices. It's about making the smartest ones. And if you do that, you'll do just fine. Now, if you'll excuse me, I've got a cherry Coke waiting. Thanks for listening, and as always, invest wisely. So, here's the bottom line, folk. Investing isn't about chasing the next big thing. It's about finding businesses you understand with strong moats at prices that make sense. Nvidia and Tesla, they might keep winning for a while, or they might not. But in my book, the real winners are the companies that keep growing steadily, year after year, without all the drama. Now, if you take away one thing from our little chat today, let it be this. The stock market is a device for transferring money from the impatient to the patient. So don't be in a hurry, do your homework, stick to your circle of competence, and let compounding work its magic. Here's to smart investing, and to knowing when to sit on your hands. Thanks for listening, and remember, be fearful when others are greedy, and greedy when others are fearful.